A little historical fun fact here. This is the first time that two former presidents have faced off since 1892. I'm going to save the audience a Google. It was former President Grover Cleveland defeating incumbent Benjamin Harrison. I want to ask you, is that dynamic? Is that meaningful for investors in any way?
I think it is, because one of the two big reasons that the market reacts to the presidential election is the uncertainty over what's going to happen, particularly if the incumbent loses. You don't know what the policies of the new administration would be. And we have a recent memory from 2016 to 2020 of what the economic policies of a Trump administration could be. So perhaps, even though because the uncertainty over who's going to win is going to be there because it's probably going to be a tight election, the fact that we probably know the basic policies of Trump and Biden could remove some of that uncertainty.
By the way, for the audience, this is one of those days you want to listen and watch. We're showing some sector moves based on who the president is. For example, we just showed how industrials moved when Biden was the president, also showing other sectors when Trump was president. I want to go back to sectors right now. Right now, of course, tech is showing a lot of leadership in the markets. But according to your research, in Q1 of an election year, obviously we're in Q1 right now, investors turn defensive. You call it the shut index or the shut trade. We're talking staples, healthcare, utilities, telecom. Are you expecting to see that trend continue this year? Is there anything that, with tech, obviously surging, does that break up that historical trend in your mind, or do you expect investors to turn back to that?
We think there's a possibility for the market for a host of reasons to have some consolidation within the bull market coming up over the next several weeks to a couple of months. So we wouldn't be surprised in that kind of environment that we'd get some more defensive leadership. And so if you think about defensive sectors, staples, healthcare, utilities, and telecom certainly would fit that bill. So we wouldn't be surprised. Now, I mean, you have to look in the broader context. The economy is doing quite well. That we're now talking about whether or not the Fed needs to be cutting rates as aggressively as we thought before, and that's fairly positive for cyclicals. So this is just one data point, but to think we'd get some a bounce from some of the defensive sectors and a consolidation isn't too big of a stretch.
Yeah, just by the way, material is actually outperforming tech over the last month. Just speaking to your defensive trend when it comes to the end of Q1. So I think the last question we have to end on, the economy is pretty strong. I think that's the consensus across the board. General thinking is that favors the incumbent. In this case, especially with the country really divided on so many issues, do you expect the economy to be a big factor when it comes to voters?
If it keeps improving, yes. Like, for example, you've seen consumer confidence tends to rise when the incumbent wins. You've seen an improvement lately in the University of Michigan index. But Biden's really got to focus on inflation, and that's going to be the biggest issue economically. So if inflation continues to come down, I think that will probably be a positive for the incumbent Biden.